Morning, good afternoon, and good evening to all. Myself, Vaibhav. I welcome all of you to today's session of Visual JForex, in which we will continue to work with the indicator named Waddah 80, which is the short form of Waddah Utter Trend. This indicator gives us a good idea of what the trend is, whether it is bullish or bearish, and accordingly, we can take our trade positions. We head to the Visual JForex board, which has been developed by the Dukascopy Bank SA. This was done in the last session where we have the instrument subscription in place with the Euro USD being the instrument of choice. Afterwards, the position amount was defined at zero. I have added these three Wadha 80 blocks of varying parameters. We have this first one of the 4 hourly candle period, and after that these two are of 15 minutes each. And if you look here, the look back period is also different. So these two are of 1 and this one is of 4. That is to take into consideration the multi-time frame dynamics. We are using these different parameters. And to look at the price volatility, we are also taking the help of these historical price candles, with the first candle being of 15 minute and these two are of 10 seconds. I think I kind of forgot last time around to change this to 10 seconds, which I will do it straight away. All right, so we have these two now defined for 10 seconds. I will give you a brief refresher of what the logic is. What are the conditions which we want to be in place prior to the execution of the trade? And in today's session, the focus is going to be on building the buy side of the equation. So we will see what are optimum conditions which we want for the execution of a buy trade. And as you can guess, given the fact that this algorithm is of varying candle periods, so first we will have to consider the 4 hourly time frame where we need the underlying instrument euro usd in this case to be in the bullish momentum, and for that we are relying on the output value of what are 80. And here the parameter which we are adopting are kind of simple. We are simply considering the values, you can say magnitude, not magnitude, it's only the condition that it should be above zero. The output value should be above zero for the execution of the buy trade. And for the sell trade, I had also explained last time around that the value needs to be in negative territory. So that's the only condition which we want to be sure of. And as you can observe in the chart, the Vada 80 trend output does quite a good job of giving us the idea of the trend. And for quite a long time, almost like last 4 or 5 days, we have the momentum on the bearish side, and that is also being reflected in these output values, where on most occasion, barring a couple of instances, the value has been below zero. So for any buy trade, we will have to look for opportunities when the momentum was bearish. So here, when we had the values above zero, I think our algorithm would have gone for the buy trade. And when the momentum turned bearish, it would have avoided doing any buy trade. So for that, we are relying on this 4 hourly candle period. And then once we are sure of the larger time frame trend, we want to be sure on the lower time frame that the momentum is good enough. The immediate momentum is strong enough for execution of the trade, and it has quite a good probability of ending up profit in near term. So for that, we are relying on the lower time frame output values of the Vada 80. And here we will actually consider the magnitude, and not only whether the output value is above zero or below zero. For buy trade to happen, provided the 4 hourly conditions are in place, we will need to define the Vada 80 output values parameter in such a way that the momentum is strong enough. So just from the observation, I had arrived at a value of 25, which I think kind of gives us a good idea of the momentum being strong enough for getting a new trade. And it's like you can say arbitrary value. There is no certain you can Even if you want, you can take a different amount, different output value. But 25, which I felt from the observation, is a good choice. So when we see the output value rising above 25 in the last 15-minute candle, we will look to initiate the buy trade, provided the candle which closed an hour back was in negative territory for the Waddah 80. So that means the momentum is now changing from bearish to bullish, and it is changing with quite a strong trend. So that's the requirement, that trend should be changing from bearish to bullish, and it should also be quite strong enough. So that will help us in avoiding the situation where we see just continuation or some sort of pullback happening. So unless the trend is strong, no buy trade will take place, and that will save us a lot of noise when we have simple these zigzag moves. Not much of a move is there, not much momentum is there, only the underlying instrument keeps oscillating between predefined range, and in such instances, to large degree, we can avoid getting involved. So that's what the underlying logic is going to help us for. So I hope you have kind of understood this logical part, and now we get back to the execution part, where we will have to define certain new variables for defining the conditions of the stop loss and take profit. But prior to that, we will simply define the conditions regarding the what are 80 output values. So for that, I will straight away take a couple of if blocks, if else statements. And this will be a market order. So current market, I will keep it just here on the board. Logical formation, we are going to need multiple action, which we will join after adding couple of calculation expression blocks. Okay, so we now, first thing first, we want to ensure that the momentum is bullish on the 4-hourly time frame. So this output value, the value is 12, it needs to be above 0. So in this case, first input will have to be greater than second input. Okay, and after that we consider the 15-minute variety output values, and here we will need the output values of these two variety blocks to be compared, and we want value 16 to be above 25. So I will write in 25 here on this. I will have to add more blocks here. First input greater than second input, value 17, it should have been below 0. So first input less than second input. So with this we have defined the conditions related to the what are at the trend. Now we consider the price action data, and we need the closing value of candle 18 to be greater than the opening price. So we compare candle 18 candle close with candle open, and here first input greater than second input. All right, This should have been joined here. Okay. And execution will happen as soon as price starts to rise above the closing value of the last 15-minute candle, which is candle 18. So we compare the closing values of candle 19 and candle 20 with the closing value of candle 18. So candle 18 candle close is going to be the common input. And we have now to consider candle 19 candle close, first input greater than second input. First input less than second input. Okay. So with these 5 conditions defined, we put these on the lower side. I will leave some space in between these blocks. We also need to define parameters for the trade command block now, which we will do. Trade amount I will change to 0.1 million. Slippage is going to be 2 pips. Stop loss and take profit will keep it in proportion of the difference between the closing and the opening value of the last 15 minutes. So I will create 2 new variables here. This will be named BSL and its value we will derive from a new calculation. All right. Now we have to define the actual difference. Whatever is the actual difference, we will need to calculate it. So for that, we are going to need mathematical components here. I think 3 will suffice. So for the time being, we will add these 3. Now, coming to finding out the actual difference, we have to consider the closing value and the opening value of candle 18. So for that, I'm going to take candle 18 candle close and deduct the opening price. So we have to make this A1 minus A2. I think here this needs to be in capital. Okay, and whatever is the difference, we will straight away we can multiply it with 2. So for that, I will create a new variable with the start value of 2. So this will need to be put in bracket, and after that needs to be multiplied by third variable. Okay. And we then convert this difference into the integer data type. So for that we have to take 10 raised to the power 4, that is 10,000. So we take this and multiply A1 with A2, and we arrive at our stop loss level, which we had defined earlier. So this variable has now been assigned to the output value of this calculation, and we take whatever is the stop loss, multiply it with this variable with the start value of 2, and then it becomes A1 into A2. So this is going to be, oh, and okay, so we have now this take profit parameter defined. All right. So with this, we have this buy side formation in place. Formation has been now completed for the execution of the buy trade. And I hope you have been able to understand this execution part of the algorithm. First, I had explained to you the logic behind it. And after that, we went on to build this algorithm formation for the execution according to that logic. And in next session, I will deal with the sell side of the equation. So for the day, we stop here. For further coverage on the market developments, do check out the Dukascopy Analytics page. We are also available on the Facebook. You can join in for the in-depth discussions there. For carrying out the testing and also for trading, you will need the help of JForex platform, which is a world-class trading platform. So all these links have been provided in the bio. Thank you all for joining in. See you next time around. Till then, goodbye.